Okay, well, I had to wait about 15 minutes or so, and then I simply locked in my profits as I showed you on the Qs last week. And what I did was I combined both my Q position and my IWM position into the profit graph here, to this Analyze tab. And what it does is it shows you that I have both the IWM and the Q positions on the three-legged box, and basically this is where we are right now. The live price is 75.47 here, which is right in here. And what that means is that I have locked in. Okay, the green line, remember, is our expiration, and the white line is our current price. What I've done is I've locked in a profit. I have an open profit of $554 on this position. But what exactly has this combined position of the Qs and the IWM ETF done for me? Well, what it's done really is given me not only a guaranteed profit of $478 at expiration, even if it doesn't move, but it also has given me unlimited upside potential and unlimited downside potential. As you can see, I can't lose money on this position. It's impossible. It just can't happen. I've locked in my profits. So if the market just stays the same, well, I've got $554 open profit. I'm guaranteed a profit of $478 at expiration. Now remember, we're only using a few contracts here. We're only using this is just for demonstration. I'm showing you how you can make money even with small amounts of contracts. Now, if I was doing 10 times as many contracts, obviously I'd have a guaranteed profit of $5,000. I mean, it doesn't get any easier than this. So if the market, now the upside to this and the real potential of these types of three-legged box and locking the box positions is that not only are you guaranteed a profit if the market doesn't do anything, but if it starts to go up dramatically or if it starts to drop dramatically, it doesn't matter. Market can go up or down, and you can make unlimited amount of money. Here's the profit here. Your zero line is down here. You have nothing but profit, whether it goes down or it goes up. So that's the power of the kind of trading that we do, is that you try to hedge your positions as much as possible. You try to manage the risk. We manage these risks by the numbers. So in other words, when we first put on our IWM position, we looked specifically at the delta. I wanted to be long a certain amount of delta because based on the analysis that we do on a regular basis, and you see those in the technical analysis modules, we knew the market was going to go up today. Just like we knew it was going to go down earlier in the week on Monday and Tuesday. Today is June 5th. We knew over the weekend that the market was going to decline. We took a position that gave us an opportunity to lock in these profits. So we locked in the profits on the downside. We knew the market was going up. Now we've locked our profits in on the upside. And you know what? It doesn't matter where it goes. We're guaranteed a profit. I have never seen anybody else explain this concept in 20 years of trading and going to all of the seminars and the marketing stuff that these people put out. This is a pretty dynamic way to trade because you can't lose money at this point. You have no other costs. You initiated the positions. You have no other costs at all because all of these are June expiration contracts, and in the next week and a half they're going to expire, and you are guaranteed at least the $500 profit. And remember, as I said, we're only doing small contracts. So that's how you trade with confidence, guys. And I think that this is the kind of information that you're not going to find anywhere else. So and as I mentioned, as we go through these types of trades in the future, especially after we get through Module 11, you are going to see the dynamics of how to lock in profits on just about any kind of position that you have. And not only lock in profits, but give you unlimited upside or downside potential. So that's it for today, guys. Hey, trade with confidence.